Saved by the Bell after hours with Netflix. Looked like my day was going to be red and I was going to end my streak. But no, thankfully Netflix came by and guess what? It was not. I repeat, it was not a long. I scored up on a major short after hours. We'll talk about that because it's one of our favorite trades at thelincolnlist.com, especially as we start moving through earnings season. I'll tell you what we were kind of looking at there because some people would think it would be crazy to short a stock that goes vertical at 65 plus, but we look at it a little bit differently. So as again, I said this day was going to be red, but before I do that, let me do the official introduction of Welcome to Stock Market Mutterings for the 16th, where I'll do a trade review and recap of what we were looking at in the room and what we were trading, as well as give you a few ideas for tomorrow. As always, if you need help with your trading, visit thelincolnlist.com, click on the trade room tab, and you can start trading with us right away. So what I've been talking about here the last few days has been continuing to be a short seller on strength and a dip buyer on weakness until that stopped working. That's been the plan. But I wanted to be respectful about that short selling because I knew at any given moment we could see what we did see today, which was a 500 plus point up run. However, the way that happened and the way that rally took place was a little different. I didn't quite expect it to go that way, but it was all good. So the first trade that we were looking at today was Adobe. Now this is something I did not mention. This why it pays to be in our trade room is because as a day trader, you have a ton of thoughts in the evening, but what transpires the next day can be unpredictable. Things just kind of show up and you need to be ready for what happens. So the deal with this was they increased their guidance and their outlook. Now that's not an official report, so to speak, as far as we just reported earnings like what Netflix did after hours. But that's what we were looking at. And it already had gapped up before the market was even open. I think it was like $18.50. So range-wise, that was really, really huge. Plus, it was very close to the 50 moving average here on the daily chart. So as soon as it started going vertical here in the morning, we just went in with a feeler around the 255 mark, I think it was. I put the statements up there. And, you know, it just came right back down quickly. So it was able to take a couple of bucks right there, maybe not quite $2, but it was a pretty nice sized trade to start out the day, a nice pullback on that. And it was a good time to do it because it actually turned around and made a new high. Now, oftentimes they'll do that. So some people will ask why you shorten into so much strength early in the morning is because that first 5-minute candle has so much emotion into it and you've got so many people buying and selling and taking profits. It's very difficult for those things to sustain themselves for the whole period of 5 to 6 minutes. So you can see there was just a really quick scalp trade, picked up a few bucks on it. I didn't go back into this one. There was definitely a decent little setup over here off of the 256 pull, which didn't look bad, but I'd already moved on from this one. The other one here was OLED. Now, OLED was a little bit different than some of the stuff that we had seen, like Apple, Netflix, and the rest of them, because it has actually been building a stable pattern for the last few days. You know, while a lot of this stuff, these bigger beta names and stuff have been taking a dump or not being able to hold gains, you look down below at the daily chart, this one did. So it had already made a nice bounce over the last couple of days from 106 up to where it is right now. It's at 121. I mean, that's a hell of a rip over the last 3 days. So I was kind of looking at, hey, if this thing gets vertical in the morning, I'm going to take that same very approach and start with a little small short. Again, when we short stuff as well, it's important to know because, you know, when you say you're going to short stuff, if you mention that kind of thing on social media, some bag holder always come by and tell you you're going to get your ass kicked or your face ripped off. And it's like, look, we have risk parameters in place. We're trading within our boundaries. We got all that stuff figured out. You're not going to rip our faces off. I'm just not going to shorten dry ships or TLRY or something like that can be out of control. I'll be able to catch this one if it does. Now, it did what you just saw with Adobe, which is a pretty good general short, is when a stock rips if you don't get it at the first 5-10 minute bars when it opens. Once it flags and re-gears, if that re-gear goes through high of day, and then once it goes through high day, it gets vertical. That usually makes for a really, really nice short. Again, this is why most breakout trades or people that trade breakouts fail because most breakouts themselves do fail, especially when they're up that much. And I think early on, that strategy was playing out well for us because, you know, still people were not convinced or maybe not 100% convinced that we would see a solidified rally today. And this was also, yet again, really, really nice pullback. So both of those trades worked out real well to start with. And I really I really can't complain about those. And I tell you what, all of that stuff looked really good. And then came along this shop, which was the same thing. You know, this shop started out pretty good too. It was a nice little trade there early in the morning on this one, on the same kind of thoughts and theory and everything else behind it. It worked too, just like Adobe. But then there was another shop trade that I took. And, you know, I got in here on this regear, and it just, by that time, the market completely changed itself, and it turned into this melt-up fest. Now, that's something that, you know, I wasn't expecting. Now, to say that I'm totally shocked, no, nothing shocks me in the market. You have a plan, you have an idea, you think something's going to happen, but we're all just human beings. And you can't guess everything, right? If you knew what was going to happen every time, you'd be the richest person in the world. But, you know, things happen and things catch you off guard. So I shouldn't say off guard. That's not a good one. So here's what I'm trying to say. I kind of expected that the volatility, even though the market would go higher, that the volatility would still be there. You'd still see some pullbacks because you saw some nasty, nasty wild moves in a lot of these stocks. It didn't do that. Actually, the market turned over and just became like a 2017 market. It's just not the way I saw this whole thing going down. Because my thought has been over the last few days, I wanted to get long. I wanted to be long a lot of these stocks. But then midday it turns around and breaks out. And then it turns into this. And just becomes, again, 2017 melt up, no pullbacks. And every stock just about seemed to be that way. Now, some of you might say, well, dude, just buy it, just buy it, just buy it. And I know there's new people that say that because you say, hey, I just buy, I'm just randomly buying. You just don't do that. When you're doing this for professional reasons, everything you do is planned and calculated and systematic. You live and die by your rules, and you have rules here. And the thing is, once something's up $12, $15 a share, I'm not longing that. Now, that doesn't mean that you just can't throw money at it and it's going to work. And you say, see, dickweed, it worked. You're a loser. No, that's not how this goes. This is all about long-term survival. You may get lucky on stuff like that, but over the course of the time, by having a lack of a process, chasing things at high, or guessing on trades, it will eventually bury you. It may work for you over a short period of time, but if you want to make a long-term career out of this and not just, get rich for a few months and then lose it all, this is how it has to be done. Agree or disagree, however you want to look at it. But anyway, I just didn't quite expect it to melt up. Now, I played around with it a little bit. I put an ad into it. I was really light to begin with because one thing I did want to do is every short that I've got into over the last couple of days, I still wanted to be respectful of a 500-point up day. I'm like, you got to think at any moment this could happen. Still wanted to be respectful, so I was light in the first place. I did an ad to it, and it gave me one little pullback right here, and I just covered for the loss. I'm like, forget this thing. It just does not, as well as 1,000 other stocks in the market, it just does not want to come down. I mean, there's that's it. What am I going to do? It just does not want to come down. So it actually put me in the red by a few $100, not much, easily recoverable, and that was just going to be the day. This brings us to Netflix because, one thing I don't like to do is trade pre-earnings because I know some people make money with that, and you're always going to hear when a stock goes up like this, you're going to have mouthy people on social media going, hey, bears, you're getting killed. When it goes down, they're silent, and then the bears are like, hey, bulls, you're getting smoked. And when it goes up like this, bears are silent. The thing about earnings is it's a coin toss. It's such a wild card because it's not based on any kind of technical analysis or fundamentals, because it's really based, because some people maybe disagree with the fundamental part because they're like, yeah, that's why it goes up, because they had good fundies. That's not what I'm talking about. What I'm talking about is the street interprets what has been said. So it's very possible that companies could knock the cover off the ball, increase their earnings, increase their sales, increase their profit margins, and the stock still goes down. There's a lot of criteria it has to meet, and that's oftentimes when you catch these wild moves. Now, it may work for you to the upside at some point, but it very easily could have gone down like it did on the last earnings, right? So it's such a wild card, and something like Netflix with such nasty range is just could be horrifying. You know, it's a tough play. It's really, when you're going into earnings, it's a 50-50 coin toss. Maybe it works, maybe it doesn't. That's the way you want to live your life. Go for it. So anyway, this thing starts ripping, and it just came down to just taking what we normally do and expanding that on a larger scale. And when you're looking at this thing going up, I don't know how many percentage points it was, but it was monstrous percentage. It was already up for the day, and then as soon as it reports, it goes from $346 to $400. And at that point, you're at that, like, hey, look, any pull off of that whole number of $400, I'm going to go into this thing and I'm going to short it. Now, I missed the initial short because I wanted to be at 400, but it pulled back just a little too quick. And I was really watching this red close. And once it started filling in just a little bit of red there, I felt, look, this thing's going to fatigue out a little bit. I'm not saying it's going to go red, obviously. I'm going to take one here. I've got a good risk to reward. I can stop above this candle, which is about $2 to $3. It's not a big deal for the potential to have this thing rotate far, far lower. Because I mean, when it goes up 60 some dollars a share, it can lose 10 or 15 bucks, and the bulls won't even notice it. I mean, it's a monster move. So I got in there at 395, and you can see there, well, it was on the sheet there when I started, and covered down there around, I think it was 388, 389, something like that. Doing this by memory. So that was it. That got me green. That got me green for the day. That was a nice one. Again, these things can be a little bit dangerous, but there was risk parameters, and I was willing to take that risk with the trade. So it's not something I said, oh, hey, you know what? It's up a lot, I'm just going to short it. While it's going up and it's all green and you're over 400 shorting it, that's kind of the risk that you're taking. It's like, well, it might not be done. In this case, I waited for just a little bit of red, a little bit of profit taking to come in. And I got to pivot to where I could say, look, that's going to be my stop loss right there. And I'm willing to sacrifice $2 or something like that, $3 for the potential to maybe make 15. Now, it ultimately comes down to 385, which was $10. So at that point, I'm like, hey, I'm tired. I'm done enough. This is a good win. I'm going to take it. So I cashed out of it. Saved me. So that means only one red day. Just one this whole month. But maybe, I don't want to use the word luck. Skill. But this is what happens after hours. Got a nice little setup, so gave me something to work on. A green day, I'll take it. Now, let's talk about tomorrow, because the thing that I don't like here is the way this market turned out today. As I said, I really felt we were going to get a rally, but the way that it went up, this is not really the way I wanted to see it. I mean, that's just trading, just things don't always work out the way you want. And at that point, as the day went on, it's like, the only value I see is to the short side, and nothing's really pulling back, and I'm not buying something that's up $16 or $17 a share. Not today. So what do we do tomorrow? I think the first thing, if you have the ability to get this look, is some of this move needs to be digested. I mean, I know it's a huge move and there's going to be a lot of optimism around it, but there's got to be a period of time to where you say, is this legit? I mean, this is a hell of a day, yes, but let's not forget it was just yesterday we were selling off. It was just 2 days ago we were giving back every single bounce we ever had, and we were buried down there towards that 200 moving average. So, it was still, it was still down there. Let's not forget that. So it could be one off day, or maybe this is something that can build this rally back up to the 50 moving average. We're going to have to see. Let a little time pass tomorrow. On the other side, you got to really start looking now maybe at some of these other stocks here that could be good ideas. Maybe like an NVDA, for example, a Roku or something, or some of these other FANG names, tech names in this space, because, there's been a lot of selling in these, and maybe, just maybe, you get some sympathy that piles over from Netflix. And I think Roku had some kind of sympathy there. Yeah, it's got a little bit of sympathy here after hours. So kind of keep your eyes on them. Maybe it turns out to be different, but I have to caution just running into these things first thing in the morning. I mean, again, they may ramp up and rally, but you're so steep right now, because you could have bought Roku all day long at $62 while you want it now at $66. You're going to need a little bit of time there to see if this rally is digestible and see the way these things set up. Remember, it's all about the setup. You know, and now you've had such a big blowout day. The first thing that's going to come to mind is it going to hold? You know, can this thing slow down some of its volatility? And will it make a continuation? So that's what we're going to have to look at. I think you definitely got to pay attention to the FANG names, Facebook, Apple, Google if you trade those higher stocks, maybe even BABA. I mean, some of these had some big days, so you got to see if this Netflix earnings gives the optimism that the rest of these things are going to beat earnings, and inject some more life into these. See if these things have another run. We'll watch that. Again, if things start getting vertical to start after just 2 days of this, I'd still take the approach of shorting, because I think that's where the value would be, especially if the very beginning move of the day was more vert on top of this. I would just have a hard time chasing into that after some of these stocks have moved $25 or $30. But we shall see. Yes, we shall see how it plays out. Anyway, I want to thank you for watching this video. If you need help, you do know where I'm at. You can see all of our trades, all the stuff that I'm showing you right here. This is done right in the room, live on screen in front of everyone else. So maybe that's something that will help you. As always, thanks for watching the video. Take care. I'll chat with everyone tomorrow.